All right, let's dive into a real detective story today. We're looking at Micron Technology, stock ticker MU, and it has been on an absolutely wild ride. But here's the thing, when you look closely at the data, the clues, well, they point in two completely different directions. So which story is the right one? Let's investigate. First, just look at this number, $190.96. That was Micron's recent closing price. Now get this, just 3 months ago, it was trading around $122. That's not just a small hop, that's a massive leap, and it tells you there is some serious power behind this stock's move.
And that, of course, brings us to the million-dollar question, right? When a stock rockets up this high, this fast, can it possibly keep going, or are we seeing the warning signs that the music's about to stop and the party's over? That is exactly what we're here to figure out.
Okay, so first up, let's play devil's advocate for the bulls. Let's look at all the evidence that suggests this stock has even more room to run. What's the case for more gains?
You see, for analysts, one of the biggest clues is the relationship between price and volume. It's not just that the price is rising, it's how it's rising. The biggest jumps are happening on days with absolutely huge trading volume. Take September 11th. The stock jumped over $10 while 52 million shares changed hands. That's a sign of really strong conviction from investors. It suggests this trend is the real deal, not just some random market noise.
And the positive signals? Well, they're coming from everywhere. The current price is sitting pretty above every single key moving average, from the super short-term 5-day all the way out to the long-term 200-day. Think of these like checkups on the stock's health, short-term, medium-term, and long-term. For all of them to be pointing up like this, that's like getting a perfect bill of health from every specialist you see. It is a very, very strong signal.
And if you thought that was it, the case gets even stronger. We have a whole panel of different trend-following indicators, and they are all singing the same tune. The ADX, which basically measures how strong the trend is high, confirming this isn't some weak, flimsy move. The A-Rune indicator? It's maxed out at 100, showing that the buyers are in complete control. And the MACD confirms that bullish momentum is still building. The takeaway here is crystal clear. According to these clues, the trend is powerfully, undeniably up.
But, any good detective knows the story is rarely that simple. And just when the bullish case looks totally airtight, a different set of clues starts to pop up, flashing some very clear warning signs on the horizon.
Because while that long-term trend looks absolutely fantastic, another set of clues is telling us to be very, very careful. And this all centers on one key concept: overbought. What does that even mean? Well, think of it like a sprinter who's been running at top speed for way too long. They just can't keep up that pace forever. Eventually, they have to slow down and catch their breath. In the stock market, that catching a breath is usually a pullback or a correction in the price.
And this number right here, this is the key piece of evidence. It's the stock's Relative Strength Index, or RSI. Now, the general rule of thumb is that a reading over 70 is considered overbought. Micron's RSI is at 81. That's not just knocking on the door of the overbought zone, it's deep inside the house, making coffee. It suggests this stock is running extremely hot.
And this, right here, lays out the central conflict in our whole investigation. On one side, you've got the trend indicators. They look at the stock's overall direction, and they're giving it 2 thumbs up. But on the other side, you've got the momentum indicators, like that RSI, which measure the speed of the price change, and they are waving a big red flag saying, whoa, this thing is moving way too fast and might be totally exhausted.
So, with all these conflicting clues on the table, what happens next? A good analyst doesn't just guess. They weigh the evidence and lay out the most likely scenarios. So let's look at the possible futures for Micron from this point forward.
Okay, based on all the clues, there are really 3 main paths this could take. First, the bullish scenario. The powerful trend just wins out. The stock smashes through that resistance level and keeps on climbing. Then there's the bearish scenario. That overbought warning proves to be right. The stock hits a wall and pulls back to find support at a lower level. And finally, the neutral scenario. It's a stalemate. The stock just gets stuck, bouncing between support and resistance as buyers and sellers duke it out.
So, after weighing all those bullish clues against all the bearish warnings, what is the analyst's final verdict? Where does the weight of the evidence actually fall?
And here it is. The verdict is caution. This is not a signal to jump in with both feet, not at all. Given all the conflicting signals, the analyst is suggesting that if you already have some gains, you might want to think about locking some of them in. And for anyone looking to buy, it might be smarter to just wait for the stock to pull back and find a better, safer entry point.
So let's just quickly recap what our investigation found. The upward trend is undeniably strong, but so are those overbought warning signs. And that's creating a really tense situation right at a key price level. High volatility is almost a given here. The most important takeaway is that this analysis isn't about predicting the future. It's about creating a map of possibilities and urging a cautious, strategic approach. And all of this leaves us with the ultimate question for any investor or trader, doesn't it? When the data points in two completely different directions, which clue do you follow? It's the central puzzle at the heart of technical analysis, and how you answer that question often defines the outcome.